Hey traders! In today's video, I will share a great strategy that uses the RSI indicator as a momentum tool combined with another indicator. It achieved a 246% profit in half a year. This strategy is easy to use and very profitable. Make sure you stick around until the end of the video, because I will share some tips to make it even better, and I will show the backtest results to demonstrate how it performed while taking hundreds of trades. Before we start, make sure to hit the subscribe button and turn on the notification bell so you won't miss any of my latest videos. Let's get straight to it. Let's begin by introducing the first indicator, the Relative Strength Index. The RSI is a momentum indicator that measures the strength of price movements in one direction. It helps us see if the market is trending and how strong that trend is. For our setup, we'll use the 14-period RSI, which is common for short to mid-term strategies. Instead of using the RSI value directly, we'll apply a moving average of the RSI. This will serve as a signal line for our entries and exits, filtering out noise and smoothing the RSI values. The RSI SMA crossover will be key in generating our trade signals. When the RSI SMA value is above 55, it suggests a bullish trend and acts as a potential buy signal. When the RSI SMA falls below 45, it indicates bearish momentum, which could signal a short position. However, we can't rely on the RSI alone. Using it without a broader trend filter could lead to false signals, especially when trading against the long-term trend. That's why we need a second indicator to confirm the overall market direction. Next, we'll add the 200-period simple moving average to our chart. The 200 SMA is a popular indicator for identifying long-term market trends. It helps us decide whether to look for long or short trades, based on the price's position relative to the moving average. If the price is above the 200 SMA, we see the market as being in a bullish trend, so we will only look for long positions. If the price is below the 200 SMA, the market is in a bearish trend, and we will only look for short positions. This mix of the RSI SMA for momentum and the 200 SMA for trend direction helps us trade with the long-term trend, lowering the risk of entering trades in bad market conditions. Now that we've added both indicators, let's go over how the trading rules work in this strategy. At the end of the video, I will show you the backtest results of this strategy using Freqtrade, an open-source Python trading bot, so you can see its true power in action. If you are not familiar with Freqtrade, don't worry. Check out the link below for a tutorial on how to get started with Freqtrade. We're trading on the 30-minute time frame, and our strategy has three main conditions for entering a trade. The first condition is our trend guard. We only consider trades when the closing price is above the 200 SMA, which shows a bullish market. The second condition is our trigger signal. We wait for the RSI SMA line to cross above 55. This indicates strong momentum that aligns with the bullish trend. The third condition is an extra risk filter. We avoid trades when the candle size is too large, as this may mean the price has already moved significantly. This helps us stay clear of trades when the market is overextended. When all three conditions are met, we enter a long position. To manage risk, we will use fixed take profit and stop loss levels. These set levels help us secure profits at a certain point, or limit losses if the trade goes against us. We will optimize the exact percentages for these levels through testing to find the best values that maximize returns while minimizing risk. Now, let's look at a short trade example where the rules are simply the opposite of the long trade setup. The first condition is our trend guard. We only take trades when the closing price is below the 200 SMA, which shows a bearish market. The second condition is our trigger signal. We wait for the RSI SMA line to cross below 45. This indicates strong downward momentum in line with the bearish trend. The third condition is our risk filter. We avoid trades when the candle size is too large, making sure we don't enter after a big move has already happened. When these three conditions are met, we enter a short position. To manage risk in both long and short trades, we use fixed take profit and stop loss levels. These levels will be set through parameter optimization using Freqtrade, helping us find the best values for maximizing profits while controlling risk. Now that we understand how the strategy works, let's explore the optimization settings. We will use the top 19 cryptocurrencies by market cap to ensure we cover a wide range of the market. The testing time frame is 30 minutes, with a backtest period of 6 months. To manage risk, we will limit the number of open trades to 5 at any time. Here are the parameters we will adjust for optimization. Take profit percentage, from 10% to 30%, increasing by 1%. Stop loss percentage, from 5% to 20%. Holding period 1 to 5 days, which is helpful for capturing gains when the market is no longer trending. RSI SMA crossover for long positions. Testing values of 55, 60, and 65. RSI SMA cross below for short positions. Testing values of 45, 40, and 35. RSI length. Testing 7, 14, and 28. Maximum candle size, from 3% to 6%. Freqtrade will use Bayesian optimization and a machine learning regressor to find the best parameter set that achieves the highest Sharpe ratio, maximizing risk-adjusted returns. After optimizing the strategy, let's take a look at the backtesting results. If you want to download the strategy code and configuration for further research, please check the link in the description below. During the 6-month backtest period, this setup achieved an impressive 246% overall return with a Sharpe ratio of 10.66. The maximum drawdown was only 11%, showing strong risk management. In comparison, a simple buy and hold strategy would have resulted in a disappointing minus 19% return. The strategy performed well in both market directions. Long positions generated a return of 72%, while short positions earned 173%. This shows that the strategy is profitable in both rising and falling markets. Now, let's look at the summary section. The cumulative profit curve shows a steady upward trend, reflecting consistent gains throughout the period. Overall, these results suggest that this strategy is effective and well-balanced for navigating both bullish and bearish market conditions. Now that we've reviewed the backtest results, let's discuss how you can start using this strategy on your own. When you visit my Patreon page, you'll find 3 important files available for download: the strategy Python file, the optimized parameters JSON file, and the configuration file. Before you begin, I recommend watching the Freqtrade tutorial. This will give you a good understanding of how Freqtrade works, especially if you're new to it. Once you're ready, here's how to set everything up. 1. Download the files and place the configuration file into the user data folder. 2. Move the strategy and optimized parameters files into the strategies folder. For your convenience, I've included the necessary commands in the strategy file. You can download historical market data using the Freqtrade download data command. This ensures you have the latest data for your backtesting. Next, to fine-tune the strategy for future markets, you can use the Freqtrade hyperopt command, just as I did to optimize the strategy. This will help keep the strategy performing well in changing market conditions. Finally, to backtest the strategy and replicate the results shown in this video, simply run the Freqtrade backtesting command. This will automatically apply the optimized parameters from the JSON file. If you prefer to see your results in a user-friendly interface, you can also run the Freqtrade web server command to view everything on Freqtrade's web UI. Now that you know how to set up and run this strategy, you're ready to continue testing, optimizing, and even modifying it for further research. As always, if you learned something new or want to see more videos, please subscribe, click the notification bell, and share this video on WhatsApp, Facebook, or Twitter to show your support. See you next time.